morning. Can you hear me well? It's good? Okay. So, Edith, my first question. SVB was the bedrock of Silicon Valley. How will its collapse change the way VC firms and startups operate in the market?
Yeah, I think what happened in March was definitely a shocking event. And, SVB been around this year, supposed to be their 40th year anniversary. And what happened in March, I almost felt like the movie, all banking crisis happening all at once. You just can't imagine within that couple of weeks in the US, Signature Bank, Silvergate, and Silicon Valley Bank basically disappeared overnight. And then on top of that, in Europe, now can you imagine Credit Suisse is now owned by UBS, and First Republic is now owned by JP Morgan. All these things all happened within the last 3 months. So when I said about SVB being the bedrock of Silicon Valley, SVB really play 5 major roles for Silicon Valley. They're the main custodian for all the startup in Silicon Valley. They're the major custodian for all the funds, including my fund in March. They are the lender to many of the startups. They invest directly to many startups, and on top of that, they also invest in many Silicon Valley venture funds. So they play so many roles, and that entity disappeared overnight. So it was definitely a very dramatic event that happened in March.
Do we have a crisis right now in the ecosystem? Because as we were discussing, things were so easy for startups that were using SVB, but right now we don't have SVB anymore as it used to be. How is the everyday for startups right now?
It was very tough, because if you can imagine, SVB being a startup-friendly bank, they make it super easy. Means a lot of the wire, when we invest, using SVB to transfer our investment to, there's no wire fees. It's a lot of things is like really easy working with the bank. So I don't think that we have it's not a financial crisis like what 2008, but what happened within one day, over $42 billion was withdrawn from the bank. It's the second largest financial crisis after 2008. But it's impacting a very specific segment, which is for the startup community. So I think, JP Morgan of the world, which is the big bank, is that a big crisis for them? Not really, because they continue to operate. But for the startup ecosystem, definitely it was a really shocking event that happened.
Any chance the big banks step up and take the place of SVB and work closer to startups?
If you think about it, startup really is a really different. I mean, there's so many of us, I think, like this coalition this time attracting at least 50,000 startups. But in the world of a big bank, it's a very strange type of asset class. You raise raise capital, we usually invest early stage. We'll write checks 1 to 5 million. But most of the companies that we invest in are like B2B, developers, tools, open source. They don't make any revenue. They have no income. So if I go to a normal big bank and I'm going to open an account, most of them actually don't want to bank with you. Because just because you have some VC money doesn't mean that you're going to be a good business. So in some sense, it's not a crisis for the big bank, but it's definitely something that crisis for the startup community.
You were closing a big fund, like $181 million during the SVB collapse. How was the experience?
I almost had a heart attack. I thought I was going to die.
I can imagine.
I remember that period of time very clearly, because March 8th was Women's Day. And March 9th, many WhatsApp group of my friends in the Valley, investor groups, startup group, are all basically, I couldn't believe it. I couldn't believe it, especially SVB was our primary banking partner. But we couldn't really take our LP commitment and just hope and pray that it's going to be there the next day. So we decided to move everything on March 9th. And we initiated a wire in the morning. And we waited for 2 hours. And usually the receiving bank, you pretty much get the confirmation right away, but that didn't happen.
Wow.
So our head of finance actually physically went to the bank and lined up in the physical store. And no one in the bank, or all lining up, no one wants to talk. And my head of finance told me there's one, didn't know if it's like startup founder or a fund manager. He went up to the counter and showed his driver license. And the customer service went, "Sir, I'm so sorry, your driver license expired 5 days ago." And he couldn't withdraw any money.
Wow.
It was very, very dramatic, but we're very thankful. We told our LPs, your money is safe, but it was definitely a very memorable moment for my career.
And what advice do you, after everything that we suffered with SVB, what advice do you have for founders going forward?
Yeah, I think the number one thing from financial side of things, and something that we never really need to think about as a startup founder, is treasury management. Means we really cannot put all eggs in one basket, means one bank, because you have obviously day-to-day banking account that you use for payroll, you pay the rent, but if you're raising millions of dollars from your venture investors, you really need to safeguard, maybe consider having multiple banks. And second, what happened that weekend was really a big crisis. And a lot of our founders, and I remember that weekend, we called all of the founders, surprisingly, and about 30% of them banked with SVB, and the rest, a couple of them actually did Bank of America, which I was very shocked. One Wells Fargo, Brex, Mercury Bank. So it's quite spread. And we called all of them up, and many of them there's one founder, she was crying because she wasn't sure that if she's going to make payroll or not. So in that sense, I think it's very, very important as a CEO to learn crisis management means you have to communicate to your employee, you have to communicate with your investor to make sure that you are the one who's in charge leading the ship. And it's a difficult lesson for all of us to learn.
We know that regulation can slow innovation in some sense. If we have a lot of innovation, we cannot do things at the same speed. But on the other hand, the SVB problem raised some questions about regulation. What's your take? Should we regulate more the bank system, or it's something that can be on the downside, slow innovation?
You know, I think that this particular crisis, there's definitely my Web3, which I was sort of excited that Invest Hong Kong, Jane introduced us, because Hong Kong is now really big on supporting Web3 and crypto. I have a lot of friends thinking, hey, if everything is just pay in crypto, you wouldn't have that problem because everything is transparent, right? And really what happened was because SVB needed to borrow over $2 billion to help, which scared people. So in that sense, I think regulation, it's good to have regulation because at the end of the day, if the US government didn't bail out, I think the whole entire Silicon Valley could disappear if that didn't happen that weekend. So I think at the end of the day, we do need regulation. We did need an entity to help safeguard. At the same time, I think the key thing is about transparency. Now we learn we need to do treasury management, not just for the startup, for funds too. So hopefully regulatory framework can help them to be more transparent.
When you were talking about like blockchain and possibilities, SVB is an opportunity for the fintech sector step up and provide solutions for this kind of limitations that big banks they have working with startups.
Yeah, it's fascinating to me because I get the opportunity to talk with sort of team from the Mercury Bank and from Brex, which is two fintech startups that definitely, I hate to say it, but in a financial crisis, there's always winners and losers. And in this case, the winners definitely, in addition to sort of the big bank, JP Morgan or Bank of America, like Brex and Mercury. I'm actually a Mercury customer. I have a nonprofit that it is so easy. I just upload most of my article and incorporation online, And within a few days, I get a bank account open. Most of the traditional bank, I still have to physically go there. So it is an opportunity. When there's a Chinese word for it, and if there's risk, there's opportunities. It all comes together. And I definitely think that this is an opportunity for fintech to think about, not only in the US. Hey, by the way, like I remember when we were talking backstage, you were in South by Southwest.
Yes.
On that day. What happened?
It was a nightmare. Parties being canceled, people crying, because some people, they could not pay for the parties because they used the SVB card, and SVB card was not working. So it was it was very fast, like Saturday, Sunday, and they could not pay for the bills, and so it was amazing.
Yeah. And then also you are from Brazil.
Yes.
Are there a lot of Brazilian startup also bank with SVB?
True. I was with this guy, $5 million in SVB, and I asked him, what are you going to do? And said, I don't know. I hope the government will help us, but we are not sure we will get the money.
Yeah.
And they said, I feel so dumb because $5 million for him was most part of the money.
Yeah.
And I feel dumb because I put all the money in one place. And so we are always telling, they were, as investors, diversifying your investment, put in different baskets. And then most part of the money was in one place.
Yeah, I think for international startups and for financial, as you said, like for fintech startup, there's definitely opportunity to support like LATAM, Brazil, or in my case, I have a lot of friends like in Hong Kong and also in China, where there's a joint venture between the Shanghai Pudong Bank and SVB, and there's so many startup and venture funds in China. Literally, they couldn't go, or Brazilian founders can't come physically to line up in a bank, right? Even we can. So there got to be a lot of opportunity for global startups. Being sitting in Canada, there's other options I think fintech startups can do to support the ecosystem going forward.
Something that some people don't get is like, and you were explaining to me, it's that startups are not good clients for banks when they are starting. After some time, they can be great clients, but not in the beginning. Why this happened?
I think it's just nature. Like for us as a venture investors, we're very, very comfortable. Well, otherwise, why do I invest in early stage, right? It's about taking risk. Our expectation for an investor, for a founder, is we fund you, let's say, $3 million. I expect you to basically take that 2 years to really figure out product market fit. If I want to push you to make money, I may as well invest in a restaurant, and you will make money from day one. But the key thing is about giving you room and time, usually about 18 months to 2 years for a seed stage. So then you figure things out so you can do high growth. So for us, we are okay, but for a bank, it's not okay because it's risky and you give me a lot of money, but you have no income. If I'm going to borrow money for you, what is there to guarantee? So which make SVB and First Republic Bank really unique because they usually will borrow up to, I think, like 30 to 40% of the investor dollar. So let's say I invested in $3 million, they could borrow $1 million from their bank. But of course, usually for later stage. So it is very unique to do business with startup companies.
Looking ahead, what changes do you believe need to be made?
It's a tough question. There's so many layers of changes need to be made, but in addition, like I would say, like for venture capital, for us, like I never imagined I have to be the one to call my founders to basically say, please next time, like diversify, making sure that you have different bank account. But more importantly, it's just that for us, my biggest learning is that we have to take responsibility to people who invested in us. In my case, is limited partner, but also our customers. That essentially is the founders. They are really, really vulnerable. A great engineers, usually the profile of our developers, they are not, banking is priority number 10th.
I
usually.
see.
So now, banking and needs on that weekend was priority number 1. So be able to manage money is something that now is like top of mind for all founders and for venture capitalists.
So even if you're a VC, now you are looking more, like in your case, you're looking more to how they're taking the financial aspects of the company, or it's something that you...
Yeah, I mean, on a quarterly basis, we always ask our founders how much cash you have in the bank, how much runway do you have, like how do you actually doing the spend. And for us, it's more, we just want to make sure that you don't run out of money.
Yeah, I see.
But in this particular case, now we have to do a lot more ongoing monitoring and suggestion. And our head of finance now become sort of almost the go-to person finance expert for all of them. Because imagine most of the seed stage company, the first 10 hires, usually 9 engineer, 1 salesperson, and the CEO is doing both. CFO is not the first, usually are not the first 10 hire for most of the startups.
And it can be expensive for a startup to have a CFO and...
That's right. And a CFO don't usually even come in not until maybe after Series A. So it's really a foreign language to many, many other founders. Now I have to handle all these things that are so new to them. But it is part of the nature, being an investor and being a responsible founders and CEO.
But now you need to think even where your money is and if your bank is safe. It's amazing to think that we need, like, startups need to think about even if the money is safe in the bank, right?
That's right. That's right.
Okay. Edith, thank you so much. We're out of time right now, and thank you all.